Now, don't you just love to see it? We got gold setting new all-time highs, massive momentum building, and we have silver at its highest price in 3 years, with still a lot of catch-up to be done over there for silver. Now, the reasoning, though, for why gold and silver is going up is not so good. And we're going to be talking about that. We got a warning sign, a warning signal that is being sent out by gold and silver, also oil and all of the commodities. And what does it come back to? It comes down to the looming war. We got the war drums beating right now. They are pounding away on those war drums, basically trying to entice Iran into doing something, it seems like, right? Because it's just like continuous threats from the West, from the US, from Israel. Don't get involved. Don't make a move. We are ready to move on you. It's getting interesting over there, to say the least. But then we expand on this, warning signal that's being sent. It's the looming recession. Now, I've already described how I believe that we're in a silent recession, but you're starting to see the weakness shown in the broader markets, in the equities that have gone now and we're correcting pretty heavily. We have over nearly $1 billion that's been wiped out of the cryptocurrency space within the last 24 hours. Equities also correcting, while the commodities, gold, silver, and oil actually spiking. And this is, just really painting this really, clear picture of the warning that is being sent of looming war, recession, and correction for the broader equities markets. That also ties in with inflation not going away. So I wanted to break this down here in this video before we get to the charts and we see those beautiful, beautiful charts for gold and silver. Let's show you why it's happening. So as I was saying, here we take a look here, Mario Nafal with the update. Apparently, Kuwait and Qatar are blocking U.S. access for any attacks on Iran. Kuwait and Qatar, both bordering Iran, have reportedly denied the U.S. use of their bases and airspace for military actions against Iran, emphasizing their commitment to neutrality and conflict avoidance. So they're saying, hey, we ain't going to be a part of this. We don't want to see this. And none of us really want to see this, right? We are praying right now for peace in the Middle East. We have Russia, Ukraine, many conflicts that we find ourselves in the middle of right now. And we just keep on sending those checks, don't we? We send a check here, we send a check there, all bringing it back for inflation back here at home. Now, this is also the longest yield curve inversion in history now. The 10-year versus the 2-year yield curve has been inverted for 444 consecutive trading days, the longest yield curve inversion in history, even surpassing the 78 to 80 period under Fed Chair Paul Volcker. Now, Paul Volcker, you know what he had to do to interest rates to bring inflation under control, right? He wrecked us. He wrecked the U.S. economy, bringing it back in, but he was able to rein back in inflation. Now, what are we going through right now? Well, they didn't do enough to battle inflation, but they did rug pull the economy because the pace at which they rug pulled and raised those interest rates from 0% up to 5% effective funds rate, that was the fastest pace that they've done that. And so this is why I continue to say we have Main Street economy that has been rug pulled here in the United States of America, and the markets have just been delusional with rampant speculation driving us up to the most recent highs. But I can show you on the charts here shortly, we have set a double top, which is a trading formation before you roll over. We've set a double top on the Dow Jones, the NASDAQ 100, the major indices. We've done it on NASDAQ. And so now, we're going to be watching here as we enter this correction, as we get a little bit of a pullback in the equities and even the cryptocurrency market. But this is what's so beautiful about the way that we've hedged our portfolio, is that we've stacked up these metals that are performing really well. And so if you just look at the performance here recently, gold has now way outperformed the S&P 500. And this was the talk of the town, right? Was this market was so strong, it was so solid, it can never go down. This time it's different. And even on this data point right here, with the longest yield curve inversion in history, which 99% of the time signals a recession, they really tried to tell us that this time it was going to be different and this time we were going to be able to achieve a soft landing. Now, depending on who you ask, I think if you ask the regular person walking down the street, if you ask the small business owner in America, there's nothing soft about what we're going through right now. In fact, there's already blood in the streets, and there's going to be a whole heck of a lot more blood. And as we've been signaling too, inflation, they're nowhere near being able to fight and achieve the fight against inflation, with even the Wall Street Journal putting together an analysis finding that the commonly purchased basket of supermarket goods increased by 36.5% over the past 4 years, or 8.1% per year, much higher than the US government CPI figures, which shows food price inflation of 24.9%, which comes to 5.7 per year. Now that might offend some people, so we should probably just strip the food prices out of the CPI report, because that might offend somebody if we talk about inflation running at 24.9%, right? If we talk about inflation at 36.5% over the past 4 years, 8.1% on an annualized basis, that might offend somebody. Just like it was offensive to call it a recession back in 2022, when Nvidia corrected 68% and the broader stock market corrected 25 to 30%. That wasn't a recession. That was just a little dip, right? Even though it was a technical bear market correction, that was just a little buy the dip opportunity is what they sold you. And it worked out well because they did pump it back up. We went and we set a new all-time high for the S&P, for the Dow Jones, NASDAQ. That's great. Nvidia, that was great. But as I warned about, you did not have a asymmetrical upside opportunity, as we knew that there was limited room to continue to the upside with big downside potential. And this is what we're finding ourselves facing here once again. Now, speaking on inflation, and a data point that they don't include because they use renter's equivalent rent, or what do they call it? Homeowner's equivalent rent, renter's equivalent rent. It's some BS data point that they include, and this is supposed to be our data point for housing inflation, right? Well, if you actually look at the cost of a mortgage, the monthly mortgage payment needed to buy the median priced home for sale in the US in April of 2020 was $1,480, 2021 was $1,690, 2022 was $2,400, 2023 was $2,550, and now here we are in April 2024 at $2,750. That's an increase of 86% over the last 4 years. But let's just strip that data point out of the inflation report, right? And we're back above 7% here once again. The bond market priced in Fed rate cuts, the market priced in Fed rate cuts, and now they're getting smacked in the face with the truth that there ain't no rate cuts coming. And there ain't going to be any rate cuts coming until the system breaks. And by that time, there's going to be a whole heck of a lot more blood in the streets. Exactly what we've prepared for, exactly how we're perfectly positioned. And now you're seeing that gold and silver have been sending that warning along with oil. Let's take a look at the chart. You want to see something beautiful, folks? Take a look at it. Take a look. That triple top here that we did in 2020, we went above 2,000 per ounce. Once again in 2022, March. And then we did it once again during the banking crisis last year in March. And then we rallied up through May. And then we finally get that breakthrough once again. And then we did get a little bit of a back test, right? To start off the year back here in February, we did dip below 2,000 briefly. Very quick little back test before this thing has just taken off like a rocket. Look at this return, folks. Just from the dip earlier this year, you're talking we've gone up 22%. How about that? You want to see an even better measurement, pull it down from right here when we were telling folks, hey, you might have an opportunity while gold's trading below 2,000 per ounce, while it's trading below 1,800, while it's trading at 1,622, you might have a little opportunity, and now we're up 50%. How about that for a return? Silver, highest price here in 3 years. Still have a lot of catch up to be had here, but that's where the opportunity's at, isn't it? Right. So for myself, someone who's relatively new to stacking precious metals, what I've been doing is I've been stacking silver exclusively. I don't own any gold yet. But what I'm doing is I'm stacking this metal because as we correct back to mean, to the average historical gold to silver ratio, right now it's like 90 to 1, which is completely out of whack. But as we get back to the historical ratio, which is about 15 to 1, 20 to 1, if we even just get close to that, it's going to be an opportunity for me to either roll some of my silver into gold, or what I'm most likely going to do is I don't want to give up this shiny silver. I really like this stuff, and I plan on passing it down to my children. And I plan on passing it down to my children, not to give them money, but to teach them a lesson about what real money is. That's what this is for. So I'm probably just going to work my butt off, go stack up some more cash, some more fiat funny money so I can just go buy some gold, because I don't really want to get rid of my silver at all. Now for oil too, we've seen this move right here. And, we saw oil went negative. It's so incredible, folks. Take a look at this thing. Oil went negative during 2020. My mentor, Dan Pena, was one of the only people, I think, in fact, he was the only person that predicted negative oil. That prediction came through, just like his prediction that cruise ships would be sold for scrap metal. And that's exactly what happened. And here we are once again, though. We've been building back up towards the end of last year and the beginning of this year. We started to build back up some momentum. Last year, the high that we got up to was about $95. That was in September. And then we brought it back down towards the end of the year. But now we're building back up here at $85 for that oil. We'll continue to watch. We're nowhere near when we were peaking out for inflation back at about 130, 125, right? But all it's going to take is one little bomb going off, one little event taking place, and we're going to see that spike up once again for oil. Now, as I said, gold, silver, sending the signal along with oil that war is looming, that a recession is already here, and that inflation is not going away. This is why, as the market corrects, I expected this crypto pullback. XRP trading with the broader crypto market, I expected this XRP pullback. And I'm loving to see, I'm already getting feedback from our community. They're loading up on XRP at 52 cents. It went down to 48 cents on my KuCoin chart, right? We were expecting this pullback. We were expecting this pullback. We were expecting this energy. We were expecting these events, all right around this eclipse energy that we just had, right? Don't ask me why the billionaires follow astrology, but there's something there. There's a there. And we've applied it to our analysis going all the way back to when I said the bear market would begin in December of 2021, right? When we warned about an event taking place in May 2022. What did we get? The Luna sacrifice. We warned about the other event on the November 8th eclipse in 2022. Who was at that time? Sam Bankman-Fried. And so once again, we were warning for this eclipse, hey, watch out for events, not just in the skies above, but also taking place down here in the markets for whatever reason. You guys know I don't get too woo-woo with it. But when it comes to making money, let's apply it to our analysis. If it's effective, let's make some money. Let's make it happen. And that's what we've been doing. And so, like I said, we've positioned ourselves perfectly for this moment because what did we focus on first? Income. So we've been building our side hustles, scaling up our businesses, asking our bosses, hey, what can we do to make sure that our company's going to stay around? What can we do to make sure that we don't get laid off? What can I do to take on more responsibility so I can get a raise? Because I need more income, not only to survive, but to be able to stack up these suppressed assets before we start to go into price appreciation. And price discovery is what we've now entered for gold. It's a beautiful thing, and you guys already know the deal. If you guys are looking to get gold or silver, precious metals, we can help you roll over a 401k retirement account, or we can get the metals shipped directly to your door. But nonetheless, this is a moment in time, I think, where we can take a look at that silver opportunity. Needs to play catch up. I don't like buying tops. I don't like buying things that are already into price discovery. And that's where gold's at right now. Right now, as I'm recording this video update, we are seeing actually a slight pullback. Silver had gone up to about 29 bucks last night. It's back down to about $27. So that's 28 bucks right now. Gold had gone up above 2,400. It's back down to 2,340 right now. So although I think that we're entering the next mania for precious metals, look out for this pullback. Maybe it might even pull back a little bit more. This might be one of the last opportunities to see this thing go before we continue with the momentum that we've been building in the precious metal space. It's a beautiful thing. And this is what I like about the way that we've diversified our portfolio, right? I'm not here to give you financial advice. I just share what I'm doing. I share what a lot of the members of my community are doing. And we've diversified ourselves so perfectly amongst these asset classes so that we're hedged either way the market goes. And most importantly, we're making sure that that money's coming in. I'm going to be dropping a update. The next installment of our business development program is going to be dropped this weekend as well. So if you guys are looking to get access to that, that is included actually in your Discord membership. Right now, I've included all my business development courses are included right now with Discord membership. You sign up through Patreon to get access to Discord, and I'm going to be dropping the next installment this weekend, along with, if you want to join us for our Discord weekly call, that's going to take place every Saturday at 11:30 a.m. Eastern. We would love to have you in there. Gives our community a chance to conversate with each other, a chance for you to ask me questions, talk about your business deals or investments. And we have a lot of fun there in the Discord group. And so really looking forward to meeting our Discord community members in Vegas as our next in-person meetup. and we're just building a massive amount of momentum behind our community. So with that being said, guys, if you guys can do me a big favor, smack it, tap it, do something with it, share it out far and wide for me, and everything's at my website, zachrector.com. We got some of the best affiliates for precious metals too, by the way. Go see what they have for you. God bless. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.